Welcome friends, in this video. Is Xcn coin boom coming? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. First of all, when we examine the current technical structure of the market, we see that the price has been moving in a certain downtrend for some time, and this trend line has not yet been broken. This downtrend is one of the most important technical elements that show that sellers are still dominant in the market, and that the price has not been able to achieve an upside breakout. Even though the price makes bullish attempts from time to time, this trend line continues to work as a strong resistance, and when the price approaches this level, it is pressured downwards again. However, like any downtrend, this trend cannot be expected to last forever. Because as we often see in technical analysis, when the price repeatedly approaches a certain level, the resistance there becomes weaker and weaker. In this case, we can observe that the price is now approaching this trend line more strongly, and sellers are offering less and less resistance. This could give us a strong signal that the market may be preparing for a reversal. The fact that this downtrend is still holding plays a critical role in determining the direction of the market. However, it is important to remember that trends in the markets always break and change direction at some point. The important thing is to analyze whether this move is confirmed or not when the breakout occurs. If the price breaks this trend line to the upside and creates a permanent move above it, it could mean that a trend reversal has started. Volume is a very important factor, especially in such trend breakouts. If there is a significant increase in trading volume when the price breaks the downtrend, the chances that the breakout will be stronger and more permanent will increase. So, just breaking the trend line may not be enough. If this breakout is supported by strong volume, it shows that the uptrend is built on a more solid foundation, and when it breaks, it should also retest. But we need to look not only at trends, but also at other metrics. Stay tuned. When we evaluate price movements according to the Elliott wave theory, we have now reached a very critical stage. We mentioned in previous videos that the second wave should be completed, and the price has formed the second wave as expected. From a technical analysis point of view, with the completion of the second wave, the third wave is expected to begin. The third wave usually contains one of the strongest movements in the market, and it is quite likely that the price will gain significant momentum during this phase. As traders, we are now fully focused on the formation of the third wave. According to Elliott wave theory, the third wave usually represents the largest and most powerful price movement. Fibonacci, one of the most followed levels in technical analysis, helps us identify the target points of the third wave. Considering the internal dynamics of the market at the moment, we can say that the third wave should reach at least 1,618 Fibonacci levels from the starting point. Fibonacci levels are one of the important technical indicators that help traders to predict where the price may pause and potential reversal levels. Looking at the current pattern, the probability of the price reaching the 1.618 level seems quite high. This level is a critical resistance point, and the market's reaction when the price reaches this point should be closely monitored. In technical analysis, it is also important to look at volume indicators to confirm the strength of the third wave. If the price is experiencing an increase in trading volume while forming the third wave structure, this indicates that the bullish move is on firmer footing. Increased trading volume is an important signal that buyer power in the market is high, and the price can maintain its upward momentum. On the other hand, if the volume remains at low levels, there is a risk that the third wave may be weak. However, looking at the current market structure, the probability of a strong third wave seems quite high. According to Elliott wave theory, the third wave is usually one of the most profitable waves for traders. This is because the third wave contains one of the most aggressive and strongest bullish movements of the market. If we look at the price action right now, we can see that the second wave is complete and we are at the beginning of the third wave. If this wave does indeed become active, it is quite possible that the price will rise to at least the 1,618 Fibonacci level. But another thing to consider at this point is how the price will react when it reaches the Fibonacci levels. If the price encounters strong buying pressure when it reaches these levels, the uptrend can be expected to strengthen further. However, if there is selling pressure, a short-term correction may occur. At the moment, the technical analysis indicators and the current market structure point to favorable conditions for the third wave to occur. If the price gains strong momentum and continues its upward movement, this could be a very lucrative scenario for investors. However, as always, it is important to keep a close eye on the market and monitor important support-resistance levels. Besides Fibonacci levels, trend lines and other technical indicators will also support the accuracy of price movements. As a result, we may be witnessing the beginning of the third wave, which usually contains the biggest price action. Looking at the Fibonacci levels, we can expect the price to reach at least 1618. If the price encounters strong buying pressure once this level is reached, it may be possible for the bullish move to continue. Remember that the third wave comes suddenly, not slowly but quickly. And as for the pattern, there is a W pattern that is clearly evident on the chart. This pattern, which is often followed in technical analysis and is considered a strong turn signal, usually indicates that the price has started an upward movement from the lows. Looking at the current situation, we can see that the price is exactly at the second bottom of this pattern and has started a bullish move from there. The formation of the W pattern can be considered as a positive signal that buyers in the market are gaining strength. The price action, especially at the second bottom of the pattern, shows that investors are recognizing this as a strong support level and are starting to buy from here. The price is currently experiencing an upward reaction from the second bottom of the pattern, and whether this reaction will continue or not is a critical issue. From a technical analysis point of view, the W pattern is often an important structure that indicates that the market has found an equilibrium at the lows and may make an upward reversal from there. The price has currently started an upward movement from the second bottom of this pattern, and it is observed that buyers have come into play here. If this upward movement continues and the price breaks through the resistance level, which is considered to be the neckline of the pattern, the probability of the uptrend gaining strength will increase considerably. Currently, the price has started an upward move from the second bottom of the W pattern, and if the volume supports this rise, the price is more likely to move towards the target levels of the pattern. One of the most important levels in W patterns is the neckline of the pattern. Usually, the price needs to break through the neckline for the pattern to be successfully completed. At the moment, we can observe that the price has started an upward movement from the second low and may move towards the neckline of the pattern. If the price reaches this level and manages to break it, the uptrend will get stronger and the price may move towards new highs. In technical analysis, the W pattern is considered as one of the safe buying zones for traders. This is because it usually signals the end of a downtrend and the start of a new uptrend. Currently, the price has received an upside reaction from the second bottom of the pattern, indicating that the market has established a strong support level here and buyers are stepping in. If this movement continues and the price breaks through the neckline, we can expect the bullish movement to accelerate further. It is good to see this reversal pattern in the second wave because it shows us that the price will go to the third wave. A break of the downtrend in the RSI indicator can be considered as a signal for a significant change in the market. Such trend breaks are often seen as a harbinger of a change in direction. In particular, a downtrend break and subsequent retest indicates that the price is gathering strength and entering a recovery. This signals that buyers are starting to dominate the market and sellers are losing their influence. The retest is a critical turning point in technical analysis because it decides whether the price can break above the old resistance level. If the price holds this level, market participants may consider it as a solid support and the start of a new uptrend. The important thing to note here is that the price continues its upward movement after the retest, and the RSI also follows this movement. If the RSI starts to move strongly upwards during this process, this could signal that the bull market is about to begin. Also, the RSI's rapid rise after this breakout suggests that the price is not only making a technical reversal, but also that there is an increase in optimism and confidence across the market. Traders may consider this upward movement of the RSI as a buying opportunity. This could lead traders to start buying more aggressively in the market, as technical indicators suggest that a strong uptrend is imminent. Therefore, the RSI breaking through this level is considered a very important indicator for the market momentum to increase and higher price levels to be seen. If the RSI continues its uptrend and moves towards higher levels, this indicates that the strength of buyers in the market is increasing and prices will follow this strong trend. Traders should be more cautious during this period and watch for the RSI's continued upward movement. This process can create new buying opportunities or even start a profitable period for traders who have been buying in the market. In this type of technical analysis, the movements of the RSI provide important clues not only about the future of the price, but also about what the market sentiment and the orientation of traders will be. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.